And we're back again on our YouTube channel interview series. Here today we have Mr. Jordan Roy-Byrne of the Daily Gold. He's a technician, and as a reminder, we spoke with him back at the PDAC, and we're just going to do a quick update on what he sees in the market from a technical standpoint. So today's segment is, are the technicals right for a pickup in fall 2014? Jordan, how are you doing?
I'm great, Sonny. Thanks for having me. How are you today?
I'm doing very well. Thanks for being on the call today. So, as we spoke back at PDAC, which is, the conference actually was very good. You had some really good points. One of the things I wanted to touch on was that when we spoke then, you mentioned that there was a double bottom in the GDX in late 2013, and now we see it rose in March by 25%, and then those levels got retested in July. What do you make of this?
Well, Sonny, with the stocks, they're really making this recent low look like the right side of inverse head and shoulders bottom, which can be similar to a triple bottom. So with an inverse head and shoulders bottom, you have one low, then you have a rally, a pretty good-sized rally, and then you fall to a new low, then you recover again, and then the next low is a higher low, which forms the right shoulder. So I think when I spoke to you, looking at a lot of the stronger stocks, some stronger juniors that I followed, they bottomed late 2013, and then they kind of retested their lows in December. So it really depends what index you're looking at or what chart. There's some that did kind of have a double bottom and then a higher low recently. But if you look at GDX or GDXJ, those appear to be forming, or they have already formed, an inverse head and shoulders bottom. And so things as they stand now to me look really good. One chart that I sent you. Well, let me step back for a second. Looking at all of these indexes here in the U.S., GDX, GDXJ, GLDX, and then the silver stocks, and also the HUI. As you can just tell, there's just so many indexes that we have. Mm-hmm. These indexes are basically really close to breaking out. In the last couple of days, they hit resistance, and they're very short-term overbought. So what that tells us is we're probably going to see some short-term weakness. And today, we saw a decline. We saw a decline in the metals. But I'm really not fazed by this decline. Again, looking at these indexes, they're really close to having a big breakout. And so I think that's why this correction will be key to really see what happens. But to go back to what I said, I sent you an index that I created of 40 companies, 28 gold, 12 silver companies, and these are most of my favorite companies. All of my favorite companies are in this index. The median market cap is about $750 million, so we're not just looking at tiny companies. And that index last week reached, I believe, a 15-month high. So the strongest stocks and the highest quality companies, they've already broken out and made new 52-week highs. So that's a very, very good sign. And the rest of the sector, these indexes are weaker in my opinion, and they always are. But they're, like I said, they appear to be starting a little correction here, which could last for several weeks. And what happens after this correction could be very interesting, because if we continue, the bulls, including myself, think that after this correction, we're going to break out and begin another strong leg higher. Whereas the bears, this is really the last opportunity for the bears. There's a lot of bears out there who think that, we need to have one more move down. And so we'll see if they can bring it down. But I think the charts favor the bulls. And just, I know I'm rambling on here, but two last points. First of all, the stocks have been much stronger than the metals. And so that's a very good sign for the stocks. They lead the metals at key turning points. They led the metals down in early 2011. Now we're seeing them lead the metals up. And secondly, the stocks closed very strong last month, and that was not only was it the end of the month, but it was the end of the quarter. So if you look at if you're looking at monthly charts or quarterly charts, the strength at the end of last month was very telling. Throughout the last year in this bottoming process, the stocks have been unable to close most of the months in a really strong fashion and close quarters in a strong fashion. And so what we saw at the end of last month, that's an indication that the people who have bought are willing to, fund managers and such, they're holding these stocks, as their books close.
Right.
Their books close the month, their books close the quarter. So those are two very good signs and reasons why I'm bullish going forward.
Interesting, and I guess we'll see in the next few months, as this is quite an important point in the market, as you mentioned, based on those indexes that you mentioned. Okay, so let's step away from the indexes here. Let's look at the markets overall with the U.S. and the Canadian markets. For example, the TSX has risen 2,000 points to 15,000 points since December, and 1,000 points since March. And then you take the Dow, which has increased from 15,000 points to 17,000. We're on a very strong rally of late. Can this continue?
With respect to the Dow, I think it can continue for a little while, but the short answer would be yes or maybe, but the long answer is no. I mean, there's a lot of analysts out there who are bulls, and they're saying that the U.S. equity market, maybe it'll correct 15 or even 20%. I think the next correction is going to be a bear market, in my opinion. So I'm cautious on the U.S. markets. They've been rising for a very long time, and if you look at history, I mean, they've gone, 5? I mean, they're in the 6th year now of this bull market, and so it's really stretched historically. But I'm not a mega bear. I'm not one of these people who thinks we're going to have another 50% crash. I really don't see that. Mm-hmm. What I do see is I do see over the next 3 or 4 years, I think stocks, U.S. equities specifically, are going to struggle to perform. I think the performance over the next 2 to 4 years is not going to be good. I mean, valuations are already fairly high. They're not extreme, so we can continue to go a little bit higher, but we can't go that much higher. And sentiment is really bullish on U.S. equities. I mean, a lot of money has already piled in there. So, I mean, I don't know when it's going to crack, but, so I like I said, I don't know when it's going to crack, but I do think we're going to have a bear market in the U.S. sooner rather than later. I think it's going to be a mild bear market, though, maybe 25%, something around there. So I'm not a mega bear. But with respect to the TSX, that had a nice breakout towards the end of last year. That's driven by, I think, strength in commodities a little bit, because we saw commodities kind of bottom at the middle of last year, and then they sort of bottomed again late last year. And as you know, the TSX is it's driven more so by commodities and resources, because Canada is a resource economy, whereas the U.S. is not. And so I think the strength that we've seen in metals and commodities in recent quarters, that's really what's been driving the TSX. Now, if the Dow does have a 25 or 30% correction, the TSX is not going to rise. I mean, it's going to be difficult for the TSX to rise. So if we do see a correction in the Dow, my outlook on the TSX would be neutral at best. I mean, looking at the TSX, I think the long-term trend is up, but it's kind of tough to call here in the medium or intermediate term. It can get dragged down by the Dow. If it is dragged down, I don't think it will be that much. And as you said, the TSX had a really strong rally, so it's if you want to buy certain sectors, such as precious metals, you want to wait for a pullback. I mean, looking at energy has advanced tremendously, and so that's something I wouldn't want to look at unless we see a big pullback. But I think precious metals are more enticing than these other sectors, which have done really well in the last year or two, but also the general sectors, which have done really well in the last 5 to 6 years. Yeah,
well, you're seeing a lot of funds, I think, be more comfortable in averaging down or even taking quite a bit of paper now in these placements of late. So it's definitely a good sign going forward that they are taking core positions in select companies that they think will provide long-term value.
Absolutely, yeah. I mean, that's an indication. A great indication from your point of view. Whereas obviously juniors were having a lot more difficulty raising money last year, and now that the markets have recovered, more people are coming back, and people are willing to take a little bit of risk. And like I told you, I think these next couple months are going to be key, because if we do get a breakout, as I expect, I think then we're going to see much stronger momentum. I don't have a crystal ball. Nobody can predict the future, but I'm bullish. That's just my guess based on all the data that I look at.
Mm-hmm. And but I remember back at the PDAC as well. You had another method of looking at the markets. You had this system of this correlation analysis between the S&P 500 and the Hui index. What is that telling you now? I mean, you've said quite a bit, but what is that analysis telling you now going forward?
Well, it's very interesting because just to refresh the minds of your listeners, what I talked about was that we kind of saw the U.S. equity market. We'll just call it the S&P 500. We've seen that approaching a top. I mean, we've been wrong. We've definitely been way too early on that call. The market's continued to climb, but essentially since summer 2011, the S&P 500 has been a one-way ride to the upside, whereas precious metals have declined, as we all know, and had a nasty bear market. Now we're starting to come out of that. I mean, the short-term correlation, it's very interesting because since the beginning of the year, the correlation has been trending more positively, but we're looking at a very short-term correlation. I think if you take a 20,000-foot view, I mean, that's still really intact, where if you look at charts of precious metals, you see that they've been basing for a year, they're bottoming, whereas the S&P looked like it was maybe topping earlier this year. It's kind of broken out and gone a little bit higher, but still, I mean, anyone with a reasonable opinion, can't believe that the S&P is just going to continue to move higher for another 2 or 3 years. I mean, maybe that'll happen, but definitely not without a 20 or 25% correction first.
Right.
And so, why this is significant is because you've had a lot of people who've made money in the general markets, and if we see the general market start to crack a little bit, I mean, where are they going to put that money? If they see the precious metals are breaking out, they're probably going to be enticed by that, and if inflation statistics continue to say inflation is increasing, I mean, those are reasons why they could sell equities and move their money into precious metals and other sectors. And so, I mean, that's like that's an opinion from a bird's eye view. Of course, everyone loves to follow what's happening today, what's happening tomorrow. So sure, in the very short term, well, over the last couple of months, the correlation between the two has been, more positive than negative. But I've noticed in the last week or so, the correlation has been, it's been a little bit negative, actually. I mean, today we saw the general markets up, we saw precious metals down. So when you're looking at the very short term, the correlation can kind of be all over the place. I mean, what you really need to focus on is the big picture. And as I said, I mean, looking at the big picture, the stock market is up for, 5.5 years, and the precious metals complex has been forming a strong base for the last year, and it's just starting to come out of that base. So I think that relationship, it still bodes well for precious metals over the long term. But that doesn't mean that if the stock market sells off by 10% over 1 month, that precious metals are going to be up 10 or 15% that month. I mean, we're talking about, what happens over several months, several quarters, several years.
Right. Okay, so, your outlook is that you think that there might be a chance of a kind of a bear correction here, but you're quite bullish on the medium to long term, or especially for the fall here, just based on what you've seen from the charts.
You're talking about with respect to precious metals?
That's correct.
Yes, I mean, looking at my charts, I just see a little bit of a correction. I don't see anything more than 10% in the indexes. Mm-hmm. And of course that could be wrong, but I mean that's what I think. And remember, we're in a very strong seasonal period for precious metals. They tend to perform really well into September. Actually, July to February is a really strong seasonal period. Specifically, August and September tend to be two of the best months. So my view fits with the seasonality that we could correct or consolidate for a couple weeks here and then try and make that next significant breakout. And with respect to the gold price, as I said, the stocks have been leading. So if we see the stocks breaking out before the end of the summer, then really sustaining that breakout, in other words, the stocks are surpassing the highs of last week, then that's a really good sign for the metals and also gold. I mean, we get this breakout, that means gold is going to be going to 1,400 and probably breaking above 1,400, in the next 3-4 months, or at least by the end of the year. And I think, that's obviously a key level because we've had this bottoming process throughout the sector. The stocks have been leading gold. And so if gold gets close to 1,400 and the stocks have already broken out, everyone's going to know that gold is going to break above 1,400. And then at that point, everybody knows that precious metals are back in a bull market and that there's a lot more room to move higher.
Interesting. I guess we'll see in the next quarterly updates or releases from the mid-tiers and the majors, and we'll see what confidence that gives to the market. But I guess we'll find out in August and September. We'll do a follow-up then and go from there. But thanks, Jordan, for being on the call and your insight. And if anybody would like more information from Jordan, you could visit him at thedailygold.com. We'll also be providing the contact information of which you can ask your questions from a technical perspective, and he can provide some insight. Thanks, Jordan.
Thanks for having me, Sonny.